I'm thrilled to kick off today's video with a golden nugget of wisdom from none other than Warren Buffett. If you don't find a way to make money while you sleep, you will work until you die. This statement holds one of the keys to unlocking lasting wealth, and in this video, we're diving deep into a strategy that aligns perfectly with this philosophy. A super easy strategy that can guide you toward financial success. Welcome to the Finance Virtuoso Channel, where we talk about all things finance. If you're seeking a daily dose of valuable information on money, business, investments, and savings, be sure to click the notification bell and hit that subscribe button now. By the end of this video, you'll know exactly how to make your money work for you, even when you're catching up on sleep. Now let's jump right in. The OPM Strategy. Looking at the title of this video, you might be wondering about OPM. This stands for Other People's Money, a strategy that is explained in a book called Rich Dad, Poor Dad by Robert Kiyosaki. This book, which I've already mentioned in our previous video, is great for anyone who's just starting to invest. So how does OPM work? Imagine you want to buy a car. Well, the car is what we call a liability. That means it doesn't make you money over time. Instead, it takes money from your wallet. Owning a car can actually hurt your finances because it's a liability. Let's say the car costs $120,000. It's a nice car, and maybe you're a fan of nice things in life, just like many of us. So after saving up for a long time, you finally have the $120,000 you need to buy the car. Now, here's where a lot of people go. They use all that hard-earned money to buy the car right away. They spend all that cash on a car that loses its value really quickly. As soon as you drive it off the lot, it's worth 30% less. So, just like that, you're suddenly worth $36,000 less, all because you wanted a fast and stylish car. You might be thinking, wait, that doesn't sound like a smart plan. Why would anyone do that? Indeed, it's not a great plan. But surprisingly, many people do exactly just this. This approach doesn't help you get richer. In fact, it can make building wealth a lot harder. Most people aren't focused on becoming wealthy. They're more interested in looking wealthy. So let's switch gears and talk about how we can actually build wealth. This is where the OPM strategy comes into play. Remember that car you've been eyeing? Well, here's some good news. You can still get it. But there's a smart step you need to take first. Instead of directly buying the car, consider putting that money into something that makes you money over time. You're basically using your money to buy something that will give you even more money back. This something could be real estate, shares in companies, investment funds, lending to others, or bonds. These things generate income for you, even when you're sleeping. Rather than spending the entire $120,000 on a car, you can invest that money in a property that you can rent out. People will pay you monthly to live there, and that money becomes yours. Now, take that passive income from the rented property and use it to cover the cost of the car. This means you're using the money from the property to pay for the car instead of your own money. This is the OPM strategy, using other people's money. As time goes by, the car becomes worth less. But all this time, you've been using money from others. If you ever change cars or get a smaller one, your investments will still make money for you. This changes the initial loss of $36,000 in car value to getting money regularly without spending your own. And that's not all. The thing you invested in will also increase in value over time, which means the money you put into it will grow. So you're making money without actively doing much, and at the same time, your overall financial worth is increasing. This whole idea of using assets to fund things like cars should change the way you think about spending and investing. You're making your money work for you, not just spending it all. And the money you make can be saved, used for fun stuff, or put back into making more money. Remember, growing your money and getting richer shouldn't only be about constantly trying to save and spend as little as possible. You should still be able to enjoy things you like in life. A smart way to do this is to put your money into things that make you more money. This can help you afford the things you want without straining your finances. Now, how much money you make from investing $120,000 depends on what you invest in. For instance, if I chose to buy property as my investment, I might not go for properties in New York. This is because the money you make from renting out properties there is not as much as in other parts of the US. Instead, I'd consider investing in a city like Philadelphia, where property prices are more affordable. When it comes to choosing between investing in new startup companies versus well-established S&P 500 companies, startups might give you more returns, but they come with a higher level of risk. What you decide to invest in depends on how comfortable you are with taking risks. Real estate is generally a great investment because tenants usually pay their rent every month. This is helpful if you're trying to cover a monthly expense, like paying for a car, for example. While you could also have investments that pay you every 6 months, you might find it hard to leave that money sitting in your bank account without using it for something else. In any case, I'd probably suggest considering a rental property that brings in rent every month, or even investments like ETFs or stocks that pay you on a monthly basis. This way, your investments can help you manage your expenses and still let you enjoy life. But wait, there's more to the OPM strategy. This part is a bit more advanced and better for experienced investors. Take real estate again, for instance. Many have grown rich by buying property without using their own money. How? Instead of investing everything themselves, they find backers or investors. These backers provide the money you need to buy the property. In return, you manage the property. The tenants doing upkeep and day-to-day tasks. The investors gets a share of the earnings or interest on their loan. They're called limited partners, content with steady returns. You're the general partner, putting in the work to make sure the property thrives and profits. It's a bit more hands-on, but you're still building wealth using the OPM strategy, even with more effort. And there you have it. The OPM strategy, using other people's money to build wealth, can be your ticket to financial success. Remember, it's not just about what you spend, but how you strategically invest to make your money work for you. So, next time you're eyeing that dream car or any other goal, think OPM and watch your net worth grow. If you found this video helpful, show your support with a like and share this video. Thank you for watching.